Hi, this is Zach here with the US Chartbreakers here at Zach's Traders Cafe for Friday, the 5th of January. Starting off with the S&P as usual, and here we've got the retreat from our peaks towards 4,800, that old resistance line projection target from September last year. Basically, we were looking for a 4,800 plus, just managed to fall short of that. But on the downside, recent neckline support around 4,700 rather, and below that, the risk of a move down to that old August 2022 resistance line projection, currently around the 4620 zone. So below 4,700, looking for 4620 on the S&P. Next up are the stocks, and one which is worth looking out for at the moment is Adiset, and here you can see that the shares have managed to push up through the 50-day moving average over the last few weeks. Nice saucer-shaped turnaround there, and that implies that we're set for maybe a decent intermediate rally, even if it's not a permanent one. Current position is that we've got this rising trend channel base, and we're looking for progress within that rising trend channel base towards the $2.80 area, which is the top of that rising trend channel from back in August. Upside value while we're above $1.75, which was recent swing low support for Adiset. Next up, a stock which I looked at earlier in the week, and it's always good to see these things repeat, because it means that they've done what they were supposed to do. In this case, we were looking for the shares of Bright Health to hit the top of that broadening triangle there around the $10.50 area. That's been exceeded by quite some distance, and now we're left looking for the next level up, which could be along the lines of the line that I'm drawing around the moment, up to as high as $21 by the end of next month, while we're above $10.50. If you're looking for a more modest target there, then I suppose it would be into the mid-teens, which would take the shares back to where they were back in the summer. But looks like a decent setup there on Bright Health. Next up, one which company which sounds very much in fashion at the moment, BTC Digital, and here you can see that we've got a rising trend channel base that's been in place basically since May last year. Top of the channel there, heading towards $6.80, and that's the target we're looking for by the end of next month, while we remain above recent support for the shares at around the $4 mark. Probably the best stop loss here would be an end of day close back below the 50-day moving average. That's currently rising at $3.75. The next contender is on its way, and it comes in the form of Dyne Therapeutics, and here a bit of a volatile swing over the course of this week, but the good news is that we've managed to settle near the best levels of recent months, and looking forward to perhaps a move up towards the line I'm about to draw, which is a resistance line projection from back in March last year. That's heading towards the $23 mark, and we're looking for that, especially while we're above recent resistance around 15. That would be the best stop loss given how volatile the situation is at the moment. Another stock which has been featured here quite a lot in the recent past is Jeff Brands, and here you can see that the shares have nudged through to hit our initial target there, which was around $4.50. Above that, on an end of day close basis, we're looking for up to $7 by the end of next month, but ideally we stay on the right side of the rising 50-day moving average near the $3 level. One of the best rises of the week has been the next one, which is Minim, and here we've had a second spike higher. We had one back in early December. The second one here now, well, the first one was just actually at the end of November. The second one here to start January, and we've got notional support there from a broken resistance line there from February last year, around $3.30. So that may be a reasonable sort of technical stop loss to go by, hoping that the shares will then retest the glories of the end of November. At this stage, I suppose only really back below the 50-day line, $1.80 would be outright negative, but given that's a long way away, $3 or so, and that broken resistance line looked like a decent money management position. Moving on to the next contender here, Mobix in fact, and here you can see that it's been a bit of a falling knife situation over the recent past. The only thing that we have to go on at the moment really is that we want to see the shares back above the old support there around $5, around the $5 mark. If we can get back above that, then there's a chance of revisiting the highs of the recent past around $10. But let's see if we can get back above 5 on Mobix. Another stock which has been in focus this week has been Omega Therapeutics, and here the shares have done what we wanted them to do, which was to hit the top of that rising trend channel from back in August. In fact, that was around the $5.20 area. We managed to close above it. Next level up is a line which I'm about to draw, which may be a bit ambitious given the recent gains, but looking for the upper parallel there of the rising trend channel as high as $7.60, but upside probably one would only really be shooting with the upside while we're above that old support on the way down around $4.50. So $4.50 probably the best money management point at the moment, ahead of a potential move to $7.50. Stock which may be as good as this one coming up next is Pono Capital, and here you can see that it's a potential bear trap from below the previous support area around the current levels, really around $10. Above $10 we've got the chance of breaking out towards retesting the resistance of the start of the year through towards $12. Best case scenario at this stage would be that the shares would head up towards the top of that triangle that I've drawn to encapsulate the price action, and that would be as high as $14 maybe sometime this month. But ideally we see the shares on the right side of the 50-day line at $10.45. On to the last three. The first one is coming up right now, and here you can see that royalty management is basically trying to build a base. We've had, I suppose, a double bottom there towards $1.40, and looking for the shares to remain above that over the near term if they can. Then the rather obvious message is that we'd head back up to the recent peak around $4.30, which was also support on the way down back in November, hopefully by the end of this month. Returning to the following stock, which is looking quite encouraging at the moment, QuantumScape Corporation, and here the reason for saying that is it's the second unfilled gap to the upside that we've had in the recent past. The first one was at the end of November, and with that leaves us looking for the shares to fill the gap up towards the top of the August gap there at $11.10 by the end of this month. Ideally we stay on the right side of the second gap down back around the $8.70 area, ahead of a potential move up to $11 plus. Finishing off with this stock, which is Silver Sun, and here we've had a nice breakout with the shares delivering a nice unfilled gap to the upside last month. The current position is that we're looking for the shares to make progress within the rising trend channel that I'm drawing at the moment, and so that would probably be towards the $25 mark as soon as the end of this month, while we remain above the latest support zone and the floor of the channel around $14.50. That's it from me today. More updates over the weekend.